Hi, with me today is Lukas Schor, co-founder of Safe. Welcome.
Thank you. Good to be here.
Let's kick it off with a few questions about yourself. When and how were you first exposed to crypto?
I think it was 2016 when I stumbled upon a video from Vitalik from DEF CON 1 presenting Ethereum and his vision behind it and how it relates also to Bitcoin and existing solutions. He kind of compared Ethereum there with a Swiss Army knife, which resonated with me because I'm a Swiss myself. But besides that, I was just thinking, like I'm coming from a business background, so I really didn't understand at all what he was talking about. So I just discarded it for the moment and didn't think about blockchain or Ethereum at all for the next few months. And I happened to be organizing tech conferences at that time, and I just got in touch throughout the next years with people from the crypto space. That was then 2017. That were very excited about what's being built on blockchain. Very smart people, very passionate. And it was at that time where a lot of money was flowing into the market through the ICOs back then. And I just had this belief, there's like really smart people who are really passionate about this technology. And there's a lot of money flowing in. And usually if you compare these factors, there's something good coming out of it. So that's when I decided I want to dig into this deeper, and also was looking for opportunities there to get involved.
Mm-hmm. Cool. What's the most important lesson that you've learned in crypto?
Yeah, I think when you come into crypto with like a Web2 mindset, where it's very typical that you're trying to build these like platforms where you log into your users, and you're very competitive because in the end it's like very competitive landscape. That usually doesn't lead to success in crypto or Web3 because here really collaboration trumps competition. So you need to build open system, ideally open source, allow many developers to integrate, to build upon, and grow like an ecosystem on top of what you're building. Also goes back to the FAT protocol thesis, where it's not just possible to like capture value on the interface level, on the product level, but on the underlying protocol as well. So this is something where kind of going for the ecosystem play, having bigger potential than just the product play. This is something I think everyone has to learn in this ecosystem or in this industry, and that's quite essential.
Mm-hmm. What's the most bizarre or craziest thing that's happened to you in crypto?
Something funny that happened about a year ago is when Sotheby's, which is like a international auction house, was auctioning off original from a constitution, from the US Constitution. And just a group of people that was excited about this opportunity came together. They coordinated and put together money in a DAO. It was actually based on Safe. And they had the idea that together they have enough money to buy that constitution. And then I was really just in the middle of the night, because it was in the US time zone, when this auction happened, kind of following this auction, where I knew that one of the parties that was involved was actually a DAO, was like hundreds of people that just came together and created such a, you call it flash DAO. That was quite funny. And based on that, then other similar situations happened where just for random reason, people came together and decided to buy something unique as a group. Like recently there was an initiative to buy a skeleton of a dinosaur. I actually don't know if they ended up succeeding, but of making a dinosaur skeleton a public good and then having a token to govern that, like these things I think are quite exciting.
Mm-hmm. Now let's change gears and talk a little bit about your projects. For those who are not familiar with your project, could you briefly explain what Safe is doing?
Mm-hmm. Yeah, so at Safe, we're building a decentralized custody protocol for smart contract wallets. And the problem that we're trying to solve is with regular wallets, you're having this single private key that's controlling your account, your wallet, and as soon as you lose the access to this private key, you don't have any way to recover access to your account. And as soon as someone else gains access to the private key, they can just run away with all your assets. And that's not something that I can see mainstream adoption kind of adopting or like using this kind of system. So our protocol allows to specify different rule sets how a wallet is controlled, such as multi-signature, where you have different keys, maybe on different devices, maybe held by different people that control this account. And this just creates more secure setups to manage crypto assets. And we're already quite successful. I think recent numbers are that we have $40 billion worth of digital assets managed through this protocol. And we have more than 30 teams building on top of that and building very customized solutions for NFT collectors or DAO treasury management.
Could you explain Safe's business model and how it is sustainable?
Yeah, so we see Safe really as a public good because it's a very crucial primitive for the Web3 ecosystem, having these like secure custody models. So as of now, we don't see this as something that necessarily needs to be monetized. So there's no like concrete business model ideas behind it. But it might be that at some point there is a need to have some monetary aspect as part of it to incentivize stakeholders that contribute to this public good and this being paid by people that consume this public good, a little bit similar to how Ethereum itself is a public good. It's like a credibly neutral platform to build upon. It doesn't have like a traditional business model, but the idea is that you have different stakeholders that run this network and they get paid through fees, and the users that consume this network are also paying. So having some model there of like, value coordination is maybe something that we're looking into.
Mm-hmm. If you had to persuade someone to use Safe by naming 3 advantages, what would those 3 advantages be?
Yeah, I mean, it's like having like a one key to your house, and as soon as you lose this key, you cannot get into your house through any means. You can also not give a key to a friend as a backup option, or have maybe your partner have a key and you have a key. And then this is really how Web3 wallets today work. So you want to have also the same way that you can recover a key to your house, or maybe have multiple keys replicated also for managing your digital assets. That's maybe one part. The other part, then more for groups, is that having this protocol that defines the access across many keys allows you to massively reduce coordination costs because you cannot share one private key with other people and in a trustless way. But having, for example, multi-signature wallet, where you can say different people have different keys and they have to confirm transactions on the blockchain and have some threshold defined how many people from this group need to confirm, just allows you to reduce the trust and also the coordination effort to manage assets collectively.
Mm-hmm. Now let's segue to more general issues related to the crypto space. What is your take on interoperability? How far away are we from solving that issue?
We're getting actually further away every day, especially during the bull market. It just happens that you get more fragmentation rather than interoperability. So many more wallets popped up, layer ones, many different dApps that have different implementations. It's getting harder and harder to establish standards. That's something that I'm excited about now that we're getting into a bear market where it's time to consolidate and really define the interfaces between the different components in the ecosystem and get better interoperability. But I think we're like perfect interoperability we will never achieve, but we're probably getting closer in the next years.
Mm-hmm. Actually, that was going to be my next question. I was going to ask you if anything good could come out of the bear market. You mentioned one thing, but is there anything else that could be positive?
Yeah, I'm a big fan of bear markets. They allow it's really the time to build. It's the time to build also meaningful partnerships. Whereas in a bull market, everyone is just trying to keep up with the ecosystem. Everyone is expanding. In a bear market, people really, or projects for that matter, go back to their roots. They really see where their expertise is, and they rather establish partnerships with others and collaborate. That's one aspect. And also, of course, on the recruiting front, things get easier because we just had like a lot of projects just hiring extremely in the last months and years. And this has slowed down a little bit. So finding ideal candidates for your role is getting a little bit more, easier, I would say.
Mm-hmm. Now, if we take a few steps back and try to get a bigger picture, the world's economy is in a disarray, and in these circumstances, is there any special role for crypto?
I think one aspect that's usually highlighted is crypto as an inflation hedge. That remains to be seen if it's really the case, but we've seen, for example, in countries where there was extreme inflation in the past, especially South American countries where this was a driver for crypto adoption, for sure. And it also, on the other hand, like the nice thing about crypto is also its transparency. Whereas if you see black swan events affecting like centralized custodians, for example, where it's really not transparent, like where they're lending out money, like what's their capitalization and so on, and it affects users in a bad way that suddenly your bank just gets insolvent, or someone you borrow money to cannot pay it back. This is something where DeFi is much better because you can really on-chain follow like the transactions. You can see how well a protocol is funded. You can prepare for potential bank runs, and I think that's something where we're just going to learn in the current macro circumstances how DeFi is actually superior in many ways.
Regulation is always a hot topic for the crypto space. Some countries have been introducing new regulations. Some countries have been tightening regulations. What's your idea of an ideal crypto regulation?
I think there's some valid areas where regulation is needed and where I would also welcome it. One being on the fringes, so off-ramping and on-ramping. There it's clear that also nation state, they want to make sure that kind of the interface to DeFi from their own monetary systems is somehow playing according to their own rules. That's obvious. And the second one is maybe stable coins, where users expect that their stable coin is actually legitimately backed by collateral. And I think it's unrealistic to assume that users actually have also the technical capabilities to see if this is not the case, or they don't have insight into how the funds are being managed by the counterparty. And there I think it's important that regulation ensures that users can have the certainty that if they use a stable coin that there's really sufficient backing behind it. Where I think it's important to not over-regulate is on the front-end side and self-custodial wallets. This is, I think, crucial to also the accessibility of this space. Like we also wouldn't assume to have like massive regulation, for example, for mail and how we communicate with each other. There's really an open protocol, and you don't want to over-regulate that part. In the same way, access to a free and decentralized financial market within the realms of DeFi should not be too much occupied by regulation.
Mm-hmm. What is your take on DAOs? Could DAOs play a bigger role, probably outside the crypto space?
I would define DAOs in the widest sense as on-chain coordination around usually a shared purpose. So whether that's like a profit-driven purpose or an idealistic purpose or fostering common welfare, for example. And we're currently seeing some experiments on like Web3 native companies or Web3 native organizations. And I think where it will then go into more space outside of the crypto space is probably around social media and more smaller size on-chain coordination or smaller DAOs. I could, for example, imagine that WhatsApp groups, Telegram groups, Facebook groups will become DAOified very soon, and then it will just scale up, and maybe at some point like traditional corporations will adopt more on-chain coordination or on-chain governance, and hopefully at some point even nation states will learn from the benefits, from the reduced transaction costs, reduced coordination costs, and flexibility of on-chain governance. But this is probably still years away.
Mm-hmm. Now I'm going to ask you about mass adoption of crypto. It's quite a major issue, and it looks like it's not that simple, it's not that fast as lots of people would want it to be. What do you think is hampering mass adoption of crypto, and what could be probably done to speed up that process?
Yeah. Well, I think we should also, we're building very critical decentralized financial and non-financial infrastructure here. So the Web2 mantra of move fast and break things is probably not what we should adopt here. So I'm not too disappointed if things don't go too fast. But then still, I also don't think things are too slow right now, because we see a lot of adoption, especially in the last 2 years, both on the financial and non-financial side of Web3. Literally every tech company right now is building up their internal blockchain teams, from Google to Microsoft. And actually this time around, they're not trying to build their permissioned blockchain and their own ecosystems, but they're actually embracing the existing ecosystems and integrating, like Instagram recently supported that you can validate the ownership of an NFT within Instagram. Reddit had a big announcement where they issued like tons of NFTs on Polygon. So these initiatives are definitely there, and they bring every day more users into the space, and I see there's actually great adoption.
Mm-hmm. My next question is about metaverses. Metaverse is quite a buzzword, but what do you think? What are the most promising use cases for metaverses?
Yeah. So when I think about metaverse, I think about the existing closed economies and closed ecosystems, where you have maybe a game. Within that game, you accumulate points, you accumulate assets, but it really just exists within that ecosystem. And the metaverse is building this meta fabric between these closed ecosystems and allows you to take assets from one to the other, to transfer between them. And I think what's most exciting, if this doesn't just happen within the digital ecosystems, but also goes from the digital into the real world. So, for example, having a game where you accumulate points, and these points then allow you in real life to get access to merchandise or to an event. And this intersection between digital and real world, I think, is quite exciting.
And my final question is about NFTs. Apparently, the NFT craze has subsided. What role can you envision for NFTs going forward?
Yeah, so it's definitely the case that there was a bubble around NFTs, so people got a little bit too excited. But at the end of the day, NFTs are a way to capture, to tokenize value, but this value cannot just be a financial value. It can be an emotional value, it can be capturing memories, it can be membership that can be captured there, it can be cultural value. And I think now that we see this financial foam slowly going down, we really see what has been built in the last months in terms of actual utility of NFTs, and having this then once we better see where the use cases are beyond just speculation, I think this is a great place to build upon, and I'm quite excited about the NFT space in general.
Cool. Well, thanks for your insights, Lukas.
Thank you, Vladimir.